Ladies and gentlemen, Oliver Velez, Chief Trading Officer and CEO of iFund Traders, inaugural keynote speaker of the First Traders Expo, international best-selling author, world-renowned trader, and entrepreneur, is one of the world's most respected and celebrated traders of all time. In 1999, Dow Jones dubbed him the Messiah of trading. Today, in 2021, he continues to be defined as one of the most influential leaders of his generation. Oliver, welcome.
Thank you. Thank you. Thank you very much. Traders, thank you very much for your patience. Thank you for being here once again. Thank you for supporting the show, and thank you for supporting virtually everything I do. For those of you who know who I am, you know that we're in for a treat here. I don't know exactly how long I have at this particular point, but I promise you it's going to be something special.
30 minutes.
Okay, fantastic. Awesome. Thank you, Barbara. I am going to, today, actually, we're going to talk about, thank you, Barbara. We're going to talk about, how to protect yourself from disaster. Now, almost every single time I'm offered the opportunity to speak here, I'm talking about specific tactics connected to profit taking. I'm always talking about specific tactics to basically make money. But, you know, a lot of people really don't focus, including myself, enough on how to protect yourself, how to not just initially protect yourself from losing trades, but how to protect yourself while you're in a trade, how to protect yourself from disaster. One of the things we have to understand is that we can't actually eliminate loss. And some people go down that rabbit hole, which is a mistake, attempting to eliminate loss. And this can't be done. I was actually having this conversation with my traders earlier. There is a point where you have to actually stop focusing on loss. When you've got your losses under control enough, when they're small enough, but you can't go too far in that category. And once you reach the point where you have loss under control, you have to start focusing on maximizing profitability. But there are still not enough individuals who know how to protect themselves in the market properly. There's still not enough individuals who have gotten themselves to the point where disaster is a thing of the past. And this is what we're going to talk about today. You have to get yourself to the point where the market loses its ability, right, to completely eliminate you. Now, listen to me carefully. All right, I'll share the screen in just a moment, but you have to understand this. There's a point where your first goal as a market participant should be to get to the place where there is no possibility of ever being eliminated from this game again in your entire life. And in the beginning, we don't have that capability. We don't have that safety net. Now, I'm not talking about getting yourself to a point where you're never going to lose. No, we're going to lose. I'm not talking about getting to your point where we're not going to have bad streaks in our trading. Every trader has bad streaks, just like every professional baseball player has a slump, if you will. All right. But elimination from the game, being completely wiped out, being completely destroyed, disaster, no. We have to get ourselves beyond the point where the market can destroy us. And so this is what we're going to be talking about today. So what I would like to do is I'm going to pull up a chart of mine today. This should be a 2-minute chart that you see on your screen. It's a 2-minute chart of Apple. All right. I'm hoping that's what you see.
Yes, it's there, Oliver.
Fantastic. Perfect. Now, on this chart, obviously in a 2-minute chart, guys, every bar represents 2 minutes of trading. And on this chart, there are two main moving averages. And these two moving averages you will forever see on every single one of my charts, no matter what time frame you see me look at. You're going to see a 20-period simple moving average, which is that blue line. Okay. and you're going to see a 200 period moving average, which is the red line. Now, I believe, and I teach my traders that a chart is not a chart unless these two moving averages are included. I don't care if you're looking at a daily, a 5-minute, an hourly chart, a yearly chart, a monthly chart, a 2-minute chart, a 1-minute chart. It doesn't matter. These are two permanent fixtures. Now, I sometimes add to these two, but I never go down and start to eliminate these two. These are two base moving averages I start with. Now, another thing that I point out to my traders is that the best trading opportunities, no matter what time frame you're on, right now we're in a 2-minute time frame, your best trading opportunities are going to originate from what I call a narrow state. Okay, so a narrow state, if I can grab a little pen here, a narrow state is defined by your stock. All right, look at the stock itself on the far left-hand side, your stock, your 20-period moving average, and your 200-period moving average relatively close together. They don't have to be touching. In this case, they're touching, but they don't have to be touching. They just have to be relatively close. That's a narrow state. Now, if you look a little further in the middle, you have a wide state. So you have the stock, okay? Let me get this out of the way here. You have the stock, the 20-period moving average, and the 200-period moving average separated apart. So you've got tightness or a narrow state to the left and a little bit past the middle, a wide state. Now, of course, if you look at this chart, you can see that the best time to have thought about getting into Apple was right off the open this morning. Here's the open, November 2nd. All right. Apple originated its life today from a narrow state. One of the best times to have basically left the game, or one of the best times to have left the game, is obviously during Apple's wide state, all three items apart. So all three items together, narrow, all three items apart, wide, okay? Your best opportunities up and down are actually going to occur from a narrow state. So one of the first things you should be looking for when you pull up a chart is, do I have a narrow state, or am I a wide state, or am I in the middle somewhere, okay? So narrow state. Now, if we take a look at what happened, let's clear our drawings here. We take a look at what happened on Apple's first 2-minute bar. This is the first 2-minute bar of the day. All right. This is what we call a clearing elephant bar. It's a towering bar. All right. It's a towering bar. Let me just, what I want to do is move this a little further to the left. It's a towering twister here. A towering elephant bar that is also clearing above its narrow state. There's a portion of this bar that's actually within the narrow state. Okay, that portion of the bar we're not talking about that portion. We're talking about the portion of the bar that actually leaves the narrow state, that gets above the narrow state. This is called a clearing elephant bar. These are your best bars to get into. A fat green or red, it can happen in the reverse as well, a fat green bar or red that is clearing a narrow state, okay? Or clearing a chunk of former data. Now, if we were to limit ourselves to fat bars or strong bars, let's not call them fat, strong bars, strong reds and strong greens that just wipe out a minimum of 1, 2, 3, 4, 5. Let's just say a minimum of 5 bars to the left of it. So let's keep that number 5 in mind. So our basic strategy is to buy into a green bar, all right, that is wiping clear of 5 bars before it. So it's growing taller than the last 5 bars before it, or a red bar that is growing taller to the downside, but is breaking the lows, all the lows of 5 bars before it. Now, let's take a look at this. If we take this first green bar of the morning here, we've got our rules in place, right? We've got 1, 2, 3, 4, 5. All 5 bars are being, all 5 previous bars are being broken through or above or superseded. Boom, that's all we need. It's a strong bar wiping out the last 5 bars. Whether those 5 bars are from yesterday, because we're dealing with the first bar today, doesn't matter. Whether those bars have formed today, doesn't matter. All right, just 5 bars before. All right, that would mark our entry point into the strong bar. Now, here's where we can simply avoid disaster. You're never going to allow the market to remove that bar. So once you have made your commitment, your protective stop must be 1 penny below that bar. And that's simple. It's literally that simple. If you can limit your buys to the right buys, to things that are so powerful, like this one event. Now, I teach traders 14 of these powerful events. This is one powerful event. But one thing that is common in all the 14 powerful events that I teach my traders is that you never lose the reason for your buy. I'm going to repeat that. The common theme that ensures that you avoid disaster is that the reason that made you buy, you do not allow the market to take that away. Well, if the market removes your reason, you immediately eliminate the game. There's no hope, there's no question, there's no anything. There's no doubt, there's no giving it a second chance, there's nothing. We are not going to lose more than that little section there. Now, so that's the number one rule to avoiding disaster, limiting your loss to the reason for your buy. What's sad is that most traders in the market, without guidance, mentorship, education, or training, they don't even have a reason for entering their trades. It's not defined. Every day it's different. It's a feeling, it's a thought, it's a random idea, it's a news piece. That's not trading, that's being at the casino. All right. We're talking about if you have a well-defined way of playing, and there are reasons, well-defined reasons that put you inside of a trade. Well, if the market removes that reason, you should not want it. Now, what if that our protection under our reason is even if we lost our reason, it's too much. Well, that trade is not yours. Or you can make it yours by either reducing your size or not taking the trade. The answer is not to move the stop up and do half of a reason. This is where you're going to start ruining the market's natural math. You don't want to ruin the market's math. You don't want to curtail the market's probabilities. All right. So if this event that I'm teaching you, the clearing event, we're clearing 5 bars or more, and we have a strong bar that's clearing 5 bars or more. Okay. That event, if I tell you that event has an 86% profitability rate, which means that almost 9 times out of every 10 times you play that event properly, you win. All right, almost 9, 8.6 times, right? So almost 9 times out of every 10, 8 to 9, let's put it that way. Sometimes a set of 10 is going to deliver you 8 wins out of 10. Sometimes a set of 10 is going to deliver you 9 times out of 10. That's where that 8.5, 8.6 comes from, right? Sometimes it's 8, sometimes it's 9. So but that's if you put your stop under the reason. If you start putting your stop midway in the reason, that it's no longer 8.6 out of 10. You have messed up the market's math. You have messed up the probability rankings, because a percentage of them will dip halfway into your reason and then go. So maybe you're down to maybe 5 times out of 10. Maybe 3 to 4 of those do dip halfway into your reason and then go. But knocking the person out that wants a tighter protection halfway into the reason. No, no, no. Full reasons. You either make a full reason stop adjustable by reducing your size and fitting your loss plan, your maximum loss plan, or that is not yours. My father used to teach me, traders, Oliver, stop chasing every dollar in the world. Every dollar doesn't have your name on it. There are certain dollars that are other people's money. There are certain dollars that they're bad dollars. You have to go out into the world and define what dollars have your name on it, Oliver. He used to tell me that at the dinner table all the time. We used to have these, dinner table talks. Oliver, stop chasing every dollar. I now share that message with my traders. Traders, stop chasing every possibility of making a dollar in a trade. You have to define how you want to make your dollars, not just chase every dollar you see. There will be chaos. There will be no order to that. And so there are times when a trade might work, but it doesn't have your name on it. And what's a scenario of a trade has good odds of working, but it's not your money? That's not your trade. If the risk to grab that money is beyond your plan, is beyond your limit, then that money, even though there's good odds, is still not yours. So if by stopping out, let's do this again, right? So if by entering above the breakout point of 5 bars or more into the strong bar and protecting yourself under that reason there, if you're going to lose here more than you should, reduce your size. If you still reduce your size to the minimum amount and it's still too much, that's not your money. Remember my dad, move on. You have to grab the money with your name on it. And in trading, the money with your name on it comes when, if you lose trying to grab your money with your name on it, the loss is just not that serious. Okay. All right, good. So now we've got that point. We protected ourselves against disaster. Boom. Now we can continue to do this. How would you continue to protect yourself? How would you protect your profits from disaster? So we've been talking about how you protect yourself from initial disaster, but there's a disastrous event where you had big bags, you had decent sized profits, decent money, and you allow the market to disastrously remove your hard-earned money, your hard-earned profit. That's not smart. And I tell traders all the time, I get them, in the beginning of their development, I have traders that are up $300 in a morning and wind up being down $300 on a day. And, they still feel somewhat proud that they had $300. To me, that's worse than just going straight to a negative $300. You had $300 and you allowed the market to take from you $600. How is that? I respect the trader who loses $300 straight than one who loses $300 after having $300 in profitability. That trader is worse than the trader who just constantly doesn't even get gains, right? Because a person who loses $300 will lose $3,000, will lose $30,000, will lose $3 million. It's only zeros, all right? The amount is not going to change the behavior of the trader. Okay, so to me, I'm always adding zeros to what they're doing, what my traders are doing. And I teach them, add zeros to your amounts and see if it's meaningful. Like if you're down $50 in a stock, add a zero, you're down 500. Now treat it like that. All right. Anyway, okay, so how do we protect ourselves against profits? Well, one way is every new solid bar, every new strong bar, you adjust your stop under the bar once it becomes strong. So look at the very next bar in Apple's formation today. The next strong bar. We had two pause bars, two setback bars after the initial power bar. But the fourth bar, 1, 2, 3, the fourth bar is another power bar. The moment that bar becomes a power bar, you can adjust your stop under the bar, which means that you don't have to wait for that bar to finish. There's a point during that 2-minute bar's life that it registers as being strong. You don't need to see any more. At a certain point, you can say, even if it doesn't grow anymore from here, right now, this is a strong bar. As once it achieves that clarity to you as a strong bar, boom, stop adjustment under that bar, even if the 2-minute bar is not finished, even if it's 1 minute and 20 seconds into the bar. If it achieves power, stop adjustment. Now, we're never going to let the market take power away from us. The same way I explained to you, I don't want to see a trader allow the market to take $300 from them. They allow the market to take power. $300 is power to me. All right. It's small, but it's still power in this world. $300 is still power in this world. You allow the market to take power from you? No, this strategy is going to force you. The market can take something small from me, but I will never let it take power from me. I will never let it take more than one solid thing from me. One solid bar is all the market gets. You've got to give the market room. All right. At the end of the day, it is your employee. At the end of the day, you have to give your employee some room. You can't crowd the employee. You have to let the employee bend its knees a little bit. You've got to give it some dancing room. You can't put it in a straitjacket, but you can't give it too much freedom either, or you'll be taken advantage of. All right. And so we're never going to allow the market to take more than one solid bar from us. I would say the next bar serves as solid too. It's solid enough for me. All right. There's nothing neutral about that. It had reached a point of solidity. Boom. I'm moving my stop there. All right. Now look at the tail bar. You see the tail bar? You might at first glance think that's not a solid bar, but it was a solid bar. Let's take a look at the height of that bar. Remember, I told you the bar doesn't have to finish. At the height of this bar, this was solid. My stop has been adjusted under that bar, okay, before the bar fell back. All right, the bar falls back, but it had reached the state of solidity before the fallback. So my stop is there. And you can go on to maximizing your gains solid bar by solid bar by solid bar by solid bar by solid bar. You can actually use this protective concept with any system. Let's say you had something as random as the dart system. You write a bunch of symbols on a piece of paper, you hang it up against the wall, and you throw a dart. And now you throw a dart, whichever symbol it lands on, that's what you're going to play. Now you flip a coin. Heads, you go long, tails, you go short. Let's take something simple like that. Throw a dart, now flip. Okay, heads long, tails short. Nothing scientific. You can apply this, which means that the moment you get in, don't lose your reason. In this case, the reason is the bar that you get into. Don't lose that bar, right? That's your reason. I flipped, it said long on that bar. That's my reason. I can't lose that bar. I'm in. Now my stop's under that bar. Now from there, if it starts moving in your favor, every new solid bar adjust. Every new solid bar adjust. Every new solid bar adjust. I promise you that this is more important than the way you get in. This is more important than the tactic you use. This is more important than the system you use. This is more important than your accuracy. Do you know why? Because many traders continue to fail to realize that this game we call trading is more rooted in your ability to lose properly, to protect yourself, than it is to enter properly, than it is to find opportunity. Because every play has a mathematical 50, every play without skill has a mathematical 50% chance of working and 50% chance of not working. That's with no study, no skill, no training, no education, no wisdom, no experience. You got a 50% chance, which means that basically half of what you do is going to work in your favor. If you apply this to the half that works, you're going to maximize your gains. If you prevent yourself from losing the reason for getting in that one bar for the ones that don't work, you're now trading professionally. You're cutting the losses short to one bar or one reason, and you're letting the winners flow by staying under big bars and ignoring little bars. Traders, I wish, I hope, I pray that you begin to understand how special this is that I'm sharing with you today, how powerful, how this one simple thing automatically, without time, puts you in the ranks of a professional. It's crazy. It's crazy. Now, check this out. All right. So let's say,
Oliver?
for instance, how many minutes do we have?
We had about 3 minutes, Oliver.
Oh, okay, good.
Thank you.
If we want to play the opposite, look at this fat red bar. It cleared the lows of 1, 2, 3, 4, 5. Boom. We can enter this bar. Remember, don't lose more than your reason. All right, that's your reason. And now, just every big bar, just move your protective stop. Every solid one. Boom. And we've just grabbed this short micro move against the trend. And you'll see how accurate this clearing event is. All right. Whether it's 1, 2, 3, 4, 5, boom, boom, protect. You see? Amazing. Now, guys, look, I want to do something really fast for you here. Let me just do this. I want to stop sharing for a moment. I want to share what I want to do is I want to share if I can. Well, here's what I want to do. Nice. Again, once again, sorry for being a little late, but I hope I've made up for being a little bit late by sharing this one thing. This is very special, protecting yourself. Protecting yourself is more important than knowing how to get in, when to get in, what way to get in. Knowing how to protect yourself is better than tactics and techniques or whatever. The one who protects himself the best will become the best trader. The best offense is a phenomenal defense. And too many traders are chasing gains when they should be becoming expert protectors. Now, listen, some of you may not be mine. Some of you are maybe already mine traders. Some of you may not be mine. You might be interested. What I want you to do is just go over to iFund, right? The letter I, ifundtraders.com. Peruse through the programs that I offer. I've taught thousands of traders all over the world. Some of the best traders in this industry have come from my training programs, right? This is professional style trading, education, and training every day, mapped out in a specific order with a structure. In addition to my training, you get funding should you need funding. So what I do is I train traders and I fund them, because I found out a long time ago that traders are the best traders when the money is not theirs. And so what I do is I put traders in business, guys. I put them in my training university. I give them money to trade with, and we go in business together. It's their business. We share the gains. I have an incentive to train you and make sure you're doing the right thing every day, because you're going to be playing with my capital. And if I don't train you properly, I lose. I take 100% of the losses. We share the gains. Nothing could be fairer. It keeps me honest. It keeps you honest. You will waste your time if you don't apply yourself. I will waste my money and my time if I don't apply myself to you. All right. There's no one who does this in the industry. And if there are, they basically started after me. I was a pioneer in this space of funding traders and training them every single day. The first one in the industry to have done that. All right. So ifundtraders.com. Look through the programs. I have programs at every different level. Pick one. It doesn't matter where you start. We'll take your trading journey from there. Once again, guys, thank you for your support. I hope what I've delivered today is some value. Money Show, thank you very much. And thank you for allowing me to complete this despite being a little late.